Hello and welcome to the Oanda Market Pulse Market Snapshot. My name's Craig Erlam, Senior Market Analyst at Oanda. Now, as you can see, there's been an enormous amount of data and economic events today. Very important data and events as well. Things like services PMI readings are very important. UK Eurozone retail sales, ISM non-manufacturing PMI from the US, services PMI. The list goes on. But I think the real key event, there's two key events which I really want to focus on today. The first one is short and sweet. It's Janet Yellen's testimony in front of Congress. Now, there's nothing really come from this that we didn't know before. Quite a hawkish tone from Janet Yellen. Again, just emphasising the strength of the US economy, the improvement and the strides made in the US economy, and really stressing the need to raise rates earlier and slower as opposed to more sharply, which they fear they'll have to if they effectively prolong this period of low interest rates. So again, a more hawkish tone, and again it does point to Fed interest rate hike come December. What I really want to focus on is the ECB monetary policy statement and press conference. Now, this was very surprising. It caught the markets completely off guard. And what I want to do while I talk about this is bring up my Reuters terminal, because as you can see, the markets have spoken and they have not been impressed with what Mario Draghi and the ECB have announced. We can see here the FTSE, CAC, DAX, everything down 3%. Yields on debt are higher. Now, of course, this doesn't actually now price in current gains today because the daily session has ended. So these gains are softer than they were earlier. But you can actually see, based on this chart here from the French, for example, French 10-year yield did spike quite significantly off the back of Mario Draghi's comments. The euro significantly higher, 2.7% on the day. The US dollar down 1.8%. Now, what this tells you is, again, like I say, the markets have been very unimpressed with Mario Draghi and the ECB and what they've announced. But they were expecting a deposit rate cut, probably between 10 and 20%. They'd priced in also additional QE quantitative easing, maybe around 10 or 20 billion euros worth of additional asset purchase, potentially with an extension to the date as well that the ECB will be conducting these purchases beyond September next year. Now, what we actually got was only a 10 basis point rate cut from the ECB, so that was very much at the lower end of expectations. No increase in quantitative easing, and a small extension to the QE program from September next year to March 2017. So really soft action by the ECB, and given how much Mario Draghi and the other ECB policymakers have really built up this meeting and really stressed the need for more stimulus, it's very surprising that the ECB have built it up and then not followed through with actual actions. Now, that suggests one of two things. Either we've been misled by Mario Draghi and other policymakers, or Mario Draghi wanted to announce additional stimulus measures, but doesn't have the influence within the ECB that he thought when he was really talking up the potential for more stimulus in the markets. Now, regardless of what it is, it's quite concerning, and it does suggest that maybe we're not going to get the kind of aggressive stimulus from the ECB in the coming months that we would otherwise have priced in. It maybe even suggests that we're going to need more stimulus maybe around the middle towards the end of next year, because current efforts have not been sufficient to actually provide that significant pickup in inflation that's going to be necessary if the ECB is going to achieve its target of below but close to 2%. Now, I'm going to bring up some charts here. We'll start, of course, with euro dollar and just look at that spike. We were at 105 earlier in the day ahead of these decisions. Again, the markets really were convinced that we were going to see some stimulus. We've talked about this grinding lower in euro dollar, despite the fact the momentum was being lost. This was suggesting it was a very overcrowded trade, and therefore really the path of least resistance was to the upside. And if we did get disappointment from the ECB and Mario Draghi, there was the potential for this surge to the upside, but this surge is incredible. From 105, and we've hit as high as 109.50 on intraday. 450 pips. That's an extremely significant move. And now we're looking at around 110 to 111 being the next area of resistance. We've got that ascending trend line as well coming in around that 110 level as well. So if we can see 110 broken, that would be a very significant break. Now, what I wanted to highlight here is that while this is an extremely bullish candle, quite often if you see such an extremely bullish move, you may think, oh, well, maybe we're going to push up back towards this 115 level. I'm not convinced at this stage that this is what we're going to see, because this hasn't been achieved from a hawkish ECB. This hasn't been achieved by new hawkish expectations that we're going to see a rate hike or anything like this. This is purely disappointment. This means that the market has sold too heavily into a move that it hasn't actually materialized, and therefore I think we could still hold around these 110, 111 levels, especially with the Fed potentially hiking interest rates in a couple of weeks time, and we may find some stability around these maybe 108 to 111 levels. I don't necessarily think at this stage we're going to see euro dollar back at 115, 116, but of course I will monitor the charts, and if this 111 level is broken, then that would suggest otherwise. Another chart I wanted to highlight, still staying on the topic of the euro, is euro sterling. Again, we've seen a very aggressive move here, and now we are already trading back at 72.35. Here we've got obviously there's a previous zone of support and resistance here between 72 and 72.35. We've got the 233-day simple moving average here, providing additional resistance. Now, I'm not convinced at this stage that will hold, because as well as euro strength off the back of this decision, we are still seeing overall sterling weakness. We could see it push back towards these 74 levels. Again, a previous area of resistance and also support on a number of occasions as well. But also we've got that descending trend line which goes all the way back to here. So this is July of 2013. Now, it has been breached briefly on a couple of occasions, but overall this is a solid trend line, and that would be a very big test for me. So around that 74 level would be an extremely big test for euro sterling if we do see it approach those levels. The final chart I wanted to highlight very quickly is WTI, and the reason I want to highlight this is because we saw this sell off yesterday, and we're back at that support area around 39.30 to 32.40. And now we are seeing small gains today, despite the fact that we have heard suggestions that these reports last week that the Saudis are willing to discuss with OPEC and non-OPEC members possible production cuts in order to find stability in prices. There have been claims today that these reports are actually false and that they are not willing. So if that's the case, given the fact that we've seen this very bearish candle yesterday, mild gains today, which even surprised me if given these reports, and if these reports are legitimate, then we could actually start to see a move back towards these 37.20 to 38 dollar a barrel level. So I think this is going to be a key one to keep an eye on. Of course, we've got the OPEC meeting tomorrow, so we're likely to hear more from different oil ministers and officials here. So we could see some movement here in the next 24 hours or so. But I think this is going to be an interesting chart, and that really does suggest that maybe the bears are coming back in force. But a lot of this will, of course, depend on what kind of response we get to this meeting tomorrow. For more in-depth news and analysis, check out Oanda Market Pulse at marketpulse.com. You can also find out more about Oanda and sign up for a free demo account at oanda.com. Here you'll also get access to Oanda Forex Labs, which has a lot of great tools aimed at helping you in your trading.